Well, Mark, it looks like we are going to have a slight retracement on the markets today. Futures pointing to a positive start, but we have had quite a sharp pullback. We had Ben Bernanke speaking last night, trying to give some comfort to the markets. Do you think this is just maybe a little bit of a relief rally that we might see coming through?
Yeah, I don't think the Fed chairman knows anything more than the rest of us do, frankly. And with the sort of belt tightening being the in thing around the world, it seems the US is the exception, however, at this stage. I think people are concerned that the economic strength may not really be there. However, we are in a different world today. The developing world has a greater share of world GDP, which is a positive, I guess.
Age of austerity is what they're calling it, Mark, at this stage. But Mia, looking at the US markets, we are seeing a correction in the US markets right now, the Nasdaq, the S&P 500 and the Dow Jones. Do you think we could see more money taken off the table? Because fundamentally, many are saying that things are looking very good. I mean, when you look at those Germany factory orders that were released yesterday, 2.8% growth in the month of April. Yes, unemployment is still a very big issue in the US, but it's still a positive number. And this time last year, we were seeing jobs being lost. So a lot of speculation coming to the fore and a lot of what ifs.
Yes, we can see that the market is absolutely driven by sentiment at the moment, where a statement by the Fed chairman can just absolutely turn the sentiment positive again. And he's not saying anything new. He's been saying what he's been saying for the past year. So when the market is driven by sentiment like we're seeing at the moment, there's definitely chances that we will see the market in the green again. But I don't think that the underlying factors are lacking. There's definitely a lot of underlying factors that already point us that we've seen over the past couple of months. We are in a stable upturn again, economic upturn, but there's still a lot of uncertainty and definitely a lot less spending.
Well, Mark, you sounded quite bullish on emerging markets. Growing percentage of GDP. Of course, we saw those Indian growth figures coming out recently, very positive there. China may be starting to slow down at this stage, though. Those PMI lost at the beginning of last week, not very far above the 50 level, are they?
Yeah, China can't walk on water. It needs export markets, and you've seen its trade surplus shrink by half. Latin America is relatively strong. This is not the late 1990s, where I can recall vividly that LATAM was not a great story. So I think a number of sort of developing countries are in fairly good shape. But ultimately, we live in a very joined-up world. So you can run, but you can't hide. And what we're seeing in China is a more inward focus at the moment, and there are limits to that.
Well, Mia, we've got copper rising for the first time in 7 days, oil also looking much better, but there's also another scenario that is playing out, obviously tightening versus the growth scenario that we could be seeing. And obviously you've got to see a lot of tightening right now because of the deficits that we've been seeing in Europe. Mark, you mentioned that the US hasn't been doing something like that as yet, and it probably will down the line. We're all hoping that China is going to pull us out of this. Mark says that China can't walk on water. Many believe, I think, that it can. What is your view on all of these scenarios that are playing out at the same time?
Well, I think I agree with Mark. They can't walk on water, but there's definitely a lot of underlying demand that can still be developed in all these big countries, especially at the Chinas, the Indias of the world. So they have the capacity to maintain their own growth, and the export market is still basically the biggest part of their economies. So they definitely need the rest of the world to start consuming again. What we've seen is that the rest of the world is consuming, but at a much slower pace. So we're definitely seeing a improvement in all the economies. It's just not at the pace that we've been used to the past 5 years.
Where do we stand in all this, Mark? Because of course we have lots of trade with Europe, we have growing trade with China and with the East and also with Latin America. How's this all going to affect us, particularly if we do see this big slowdown coming through in the European Union?
Well, I was down at the docks in Durban yesterday. Bidvest is one of the biggest freight operators in the country, and virtually anything that moves in and out of South Africa, they touch. And they are not seeing any material improvement in volumes. There's also the fallout from the Transnet strike.
Is that still looming?
That is a serious impediment on companies, and we haven't seen the final consequences of that, and they're quite serious, in fact.
Well, they say it's going to be about 2.5-month lag is what most people are talking about.
That's just clearing the backlog. But the impact on company balance sheets and profitability, you've got containers of stuff that are sitting now back in Hong Kong. You know, you've got to ship them back and pay double charging on that. A lot of smaller companies, particularly, less affected will be the Anglos and BHPs of this world. It's a sort of deferral, but a lot of smaller operations will be very seriously affected. But certainly, although we've had fairly positive GDP numbers, you could almost argue it's a dead cat bounce. There is no evidence in the trade movements that Bidvest is putting through that we're seeing any material underlying improvement in demand.
How about the World Cup? Bidvest put out a statement last week saying that earnings would only be enhanced by 1 to 2% from the World Cup. And as you said, anything that moves in and out of the country is moved by Bidvest. If you go to the airports, they have baggage handling services, they bus people to the planes. So they're a big player at the airports as well. Why such a small impact from the World Cup?
There will be gains in some areas and offsets elsewhere. It's very difficult to quantify, even for a group like Bidvest, which of all companies in South Africa, of all groups, is best poised to actually sort of benefit. There's no tangible figures coming through. What we do know is that, firstly, the sort of expectations aren't quite as robust. Secondly, there is the possibility that you'll get a late rush.
Yeah, what is your view on the Transnet strike and the impact?
Well, we've seen the coal at the Richards Bay coal terminal basically run out. They have seen the coal that's exported from that terminal decline in price by over 0.5% just because of the lack of coal getting over there. And where they've seen around about 750 trains a day coming in with truckloads, with coal loads, that's actually down to a third or less than a third of it. That can just show you the big impact that it has. They've basically run out of coal to export out of that terminal, where all the companies that want to export from there are absolutely dependent on transport for that, on Transnet for that.
And of course we know that in the best of times Transnet battles to get all of the coal you need to the port, so it's going to be difficult to get rid of this backlog, isn't it?
Well, to add insult to injury, there's been sabotage. Only about 30% of the trains are actually running because they've been derailed, damaged, sabotaged.
Set alight as well.
You know, and this is activity that borders on undermining South Africa's not only its economic prospects but its good standing in the world. And I think it's really just taken the cream off the World Cup. There's so much stuff that's lying idle there that they can't shift in time. And a lot of business people that I've spoken to are quite sort of desperate. So I think here is a real failure of leadership and clearly an indication that management and the workforce have completely broken down.